Hey, it's Carl Kwan here. This is an English audio lesson from Bloomberg Businessweek about the big drop in the stock market, and it's a really great way for you to practice your English listening skills. For those of you that have class with me, make sure that you listen to this at least 10 times before class and 10 times after class. But for those that don't have class with me, here's what I want you to do. Number 1, listen to everything once. Number 2, listen to everything again. Because listening to shorter material more often is much more beneficial than listening just once or twice to something a lot longer. Number 3, listen a third time, but this time stop the audio after every 5 seconds and write down at least one keyword or key point that you heard. Number 4, listen again. This time stop the audio again after every 5 seconds and check your answers. And write down those answers and make sure that you hide them, okay? Number 5, listen again, but this time stop the audio after every 10 seconds. And again, write down at least 1 or 2 keywords or key points that you heard and check the answers that you wrote down in step number 4. Finally, number 6, listen one more time. This time you should be able to hear a lot more than the first time that you listened to this. Now, if you still have trouble, please leave me your questions in the comment section and I will definitely help you out. Thanks and good luck. Stocks sinking to crash low signals worse to come. May 21st, 2010 by Lynn Thomason and Rita Nazareth. Any investor who wants to gauge how serious the stock market's retreat is need only know the Standard & Poor's 500 index has fallen below its low on May 6th when panic selling prompted calls for reform. The equity index retreated 3.9% yesterday in its biggest loss in 14 months, sinking to 1,079.59 and slipped as low as 1,055.90 today. That compares with 1,065.79, the low 2 weeks ago, when $862 billion was wiped out in 20 minutes. The options market benchmark, known as the VIX, soared 30% to 45.79 yesterday, meaning expectations for volatility are the highest in 13 months. Europe's debt crisis has pushed the S&P 500 down 12% during the past month, as concern grew that deficits in Greece, Spain, and Portugal will unhinge the global economic recovery. Regulators have proposed 6 potential causes of the May 6th crash, including losses in exchange-traded funds and an unwillingness to match orders among some electronic traders.